Hi traders, this is Krishna Joshi here from 7 Points Capital, and I'm going to bring you today's trader takeaways. A slow day, very range bound in SPYs, SPY, not much, no big catalyst, a few big earnings though, but if you see the movement in SPY is really restricted. Sold up, gapped up from yesterday's close. So this is SPYs on the daily. Look at the body on this particular candle, really small. It gaps up from yesterday's close at 270.20. It gaps up about 271, and then it had such a hard time staying about 271. Look at the big sell-off right off the open. As expected, banks have announced earnings, and this week every day the SPYs have sold off right off the open. Gaps up, sells right off. And today Morgan Stanley announced, and we didn't see anything different with Morgan Stanley. Like the SPYs just sold off, Morgan Stanley sold off, just like all the other banks announced good earnings and then just sells off for the rest of the day. But what was interesting was this 271 level. Look at the number of attempts it tried to break. 271, goes down, comes back. So 1, 2, 3, 271 again, 271, 271. About 8 to 10 failed attempts to break above 271 and hold above that. And at 2 o'clock we had the beige book, and it could not hold. It sold off and then just made that dead cat bounce to 271 and just closed around like pretty much where it spent most of the day, which was around 270.50. So this was like the bottom of the range. Get long here or get short TVIX and then do the opposite trade. So that was what was working a lot during the day. I'll get into individual names. If you know, I like to divide it into 3 segments: good trades, bad trades, and something that I should have done better. So I'll focus on UAL. I had a short position right off the open around here. Got stopped out for a small loss. I tried the short again. I kept my stop above the 69 mark, and it kind of took me out. But again, what happened on this particular big green candle that you can see, I saw a big change in momentum. I saw a lot of green prints going on after this candle. So it would go up, it would come right back, it would go up 10 cents, come down 10 cents. It kept doing that for a while, and when it set up here again at 69.11ish, this is where I got involved on the long side, and I had half my stop below the 68.80, like somewhere close to here, and the other half was here. And then what I did not like about this was I missed the entry over here, but this ended up being a really good long. I took, I think, 70.25, which was somewhere on this one. So I saw like a topping candle. I got out on this one, bought back some of it, but didn't stay with it. I did not have, I felt like it could be the 5th wave, won't be a very big move in the end. So given the risk reward, I really like the setup where it was wedging. It kind of looked like a good breakout. And then once I let it set down instead of chasing it right here, I see what it wanted to do. It went up to 69.30, comes right back into my buying area, and which is why no chasing, good risk reward, and ends up being a good trade overall. It did kind of top out at that 72. I tried shorting it a few times, but didn't make a whole lot of sense on these kind of trades. I wasn't sure if this is where the momentum was because the stock was strong all day. SPYs were in a caught up range, so I kind of left it alone. Had a very small feeler position, couple of trades, but nothing spectacular. Another good trade was CSX, where the stock was strong, good set of earnings. Again, let it kind of come into my buying area. This is what I'd been watching since the morning. I had my trend lines drawn, and this was my first entry. This trend line was somewhere around here. Started buying it in the 59.80ish and kind of booked everything on the rip. Got in again, booked everything on the rip. I think I bought it again and I lost a little bit, but I had a good P&L cushion on these 2 setups that I could probably risk 10-15 cents to have another rip through the highs of the day, but I didn't have to do that. Instead, I left it alone for a bit. I started going long at 60.30. This is where I got involved on the long side again. didn't do a whole lot again because spies were sideways. 12 to 2 wasn't really working out well for me. I was giving back a little bit of PNL. So this is where I go long midday, and I feel like there's going to be a continuation because I see this wicks where it's trending up, it's wedging, it's really nice, good ascending triangle setups all throughout. So once it gets into my buy area, I knew that they did not really, the stock was holding up the 25s. It would dip down to 22 and hold the bid again at 25, 26 bid. So it gave me a good risk reward setup here versus 18. So this is where I was trying to get long. I had a decent position here and ended up being a good trade. Took probably a third of it, and all throughout, in fact on the pullback I had even bigger position than I initially had. So I had my full size right around here. I had about tier 3 over here, I had tier 4 full size, and then as it would go up I'd probably have aggregator orders thrown out, take a few, and then on the pullback I'd just add everything back again. So I had again my full size. I'm long 60-50 for everything, and I think I got out on those at 60, 65, 68, some around here, and some again on the push up. So I just moved my sell orders from like 74 to like 68 and got out for most of it. This was pretty nasty. This was actually a real bar. You can see the high of this bar on the top left of the window is 60.83, the low is 60.31. So this was an actual bar, 50 cents. I did not do anything much around here, left it alone after this, but ended up being a good trade. Another good trade that I could have done better was this one. Same kind of setup that we saw in CSX. The stock looked fantastic, sets up. I'm long tier 3 around here with a tight stop loss, and then it just shoots up, boom, boom, boom. I got out a little early on this. I took 44s, 48s, and some in the mid 50s. While I could have had a few more, about 25 cents easy. Instead of that, I kind of rushed out of the position because how quickly it actually went up. So I tried shorting it around here with the stop above this. I shook myself out of the position, didn't really feel great about it. Did kind of do what I expected, but I wasn't in it for the 30 cents, even if I was in the trade. So what I could have done better on this one was stayed with it much longer. And the last segment, something that I could have done better is going to be IBM. So IBM, I think I tried buying it off the 49.50, 49.60, the low around here. So I bought 49, 69, 70, and all the way a little bit up. And back then I felt like the stock could have been done because looking at IBM on the daily, big company, poor set of numbers, the EPS is not going anywhere, the revenues is not on the growth trajectory, so it's been beaten down last few earnings. You can see big gap downs on a stock like IBM. That's pretty rare, and we know that Warren Buffett offloaded some of his stake as well. So my mistake here was knowing that 148 seems like a support. Let's try going long against the lows, and I had a bad exit on this one, and then I think instead of going short right away, I just kept watching it. It just kept drifting lower all throughout. So I think something that goes down in my journal is like not really, if the earnings are going to be poor, this is only the beginning of earnings season, so I really have to make sure that I focus on getting, staying with the trend, staying with what the numbers look like, and being on the right side of it instead of really focusing on the smaller moves. So looking at the big picture is going to be a big takeaway from today and an important note for the rest of the earnings season. All right, anyways, thanks for watching, guys. Appreciate the like, subscribe, share it with your friends, and feel free to write in your comments, send your feedback. And I'm trying to be more active on Twitter, so I'll catch you guys there. Thanks again for watching.